Hello everyone! Have you ever thought what is going beneath the price? What are the big players doing? Is the current price action a trap? Welcome to Market Demystifiers. Today I will show you something which is less used but is extremely powerful in trading called CVD, Cumulative Volume Delta. And by using CVD, you can read through order flow and understand what is currently happening in the price action and what you can expect to happen soon. Before we begin with cumulative volume delta, CVD, firstly you need to understand some basic things. So when you trade, you can do orders via two options. One is a market order, which is basically an instant execution of an order where you accept the current market price. So you click go long on the market order and your order is instantly executed. The other option is limit order. In case of the limit order, you choose a price, and only if this price is reached, your order will be executed. If this price won't be reached, your order will not be executed at all. So the assumption is that the market orders are more common used by the smaller players, the retail investors, and by more emotional traders, because the market orders are more aggressive orders. They are executed instantly, so the people don't want to wait for to get a certain price, but they want to go into the trade right now. Whereas the limit orders are more commonly used by larger players, by market makers, by bigger institutions. And usually the size of a limit order might be bigger because as it is used by bigger players. So now the CVD, which is cumulative volume delta, shows you basically the delta of buying volume and selling volume done by the market orders. So the participants who are using the market orders, and then it accumulates this delta on over time. And you can see an example of this line, of this CVD here, when basically the line is increasing, there is more buying pressure, the delta, there is more buying volume. When the line is going down, there is more selling pressure. So now I want to show you the examples of how you can use CVD for better trading for the range in which we have been in Bitcoin since around 21st of June. Just before we go there, please note this is not financial advice, it's just my way of thinking and it's for educational purposes only. Alright, let's start. So let me firstly show you the first example of a small absorption. So what you can see here is that price has made a low and then it made a higher low, whereas CVD has made a low and it made a lower low, which means that there is some heavy aggressive selling happening here, but somehow the price is not going down, not going lower than this low. How is it possible? Well, there are some limit orders, some bigger players who are absorbing this heavy selling of the market, of the participants who are using market orders. And usually what happens in those examples is that the price will act in accordance to what the larger players want. So as you can see, the selling was absorbed and then the price moved higher. Now if you look at these highs, you can also see this absorption, but now from the other perspective. So CVD here, this is the candle which made the highest high. CVD is increasing, but the price, as you can see here, is decreasing. So again, there is some more aggressive buying, but price is not going higher, it's going lower. What it means? Again, some larger players using limit orders are absorbing the aggressive buying pressure, and because they absorb it, they absorb all of this pressure, and then what usually happens is again the price goes like the bigger players want it to go, so it goes down. The next example would be kinda more interesting because it would be exhaustion, and for me, both in case of CVD, we should look at both exhaustion / manipulation and the absorption. So in this case, as you can see, price is making almost equal high. Whereas what you can see in CVD is is significantly lower. And what it means is that there is lack of market participants at this point to push the price higher. Because there is lack of market participants and they are exhausted, what will happen next is that price will go lower. Now, before this exhaustion, which we see over here, you also had another big example of absorption. So if you compare those two lows in price, and then you also compare it with the CVD, you can see that in case of CVD, there was some aggressive selling, some big selling, whereas the price here was not going lower than the prior low. In case of CVD, it went much lower. So again, in this case, the big players were absorbing the selling pressure, price moved up. However, here when we went to this high, this equal high, there was lack of market participants who were buying the which is showed by CVD, and price dumped again. Okay, so let's see what happens next. Let's go slightly on a higher time frame, and I can show you another example of exhaustion. So here we had a high, here we had a higher high, and then we had even higher high over there. Whereas what happened in case of CVD is that here we have this high, then here we have significantly lower high, and as the Bitcoin was getting a higher price of 31.5 thousand, CVD was making again a lower high. So what it means again for me is that even though there was more selling than buying in case of the participants who are using the market orders, and it's the market orders which are moving the price, whereas limit orders absorb the pressure, either selling or buying. So from my perspective, this is some kind of manipulation, and of course you can also see exhaustions at the top, because the lack of, as you can see, that there was not enough market participants basically who were buying at those highs to push the price higher. So again, in this example the price dumped, and in this example the price dumped even more. Interestingly, what you can also see is that at the lows, again, we had an example of absorption. So as price was making a higher low, CVD was making a lower low. So here, when what was going on is that market participants were selling. There was heavy selling, but price was not going lower. So someone was absorbing the pressure, and as the absorption was done by presumably the larger players, the price moved up. Interestingly, what you can already observe in those examples is that at the bottom we have absorption. So larger players are supporting the price and they are not letting the price go down. Whereas at the top we have exhaustion. So there is not enough market participants who are buying to move the price higher. And for me, this might be a good example of a distribution range, where basically you have those big players who accumulated Bitcoin at lower prices, and now they want to distribute what they accumulated before. But because they are so large, they cannot distribute everything at once, because it will dump the price massively, and not all of their orders would get filled. So what they do is they don't allow the price to go low. They artificially support it by showing this absorption, so that market participants can have higher confidence that the price will go higher. But as they distribute at the highs and there is lack of market participants to push the price higher, the price dumps quite quickly from those tops. Now, if we go further, we can see another example of exhaustion at the top. So again, we have a higher high, a CVD is making significantly lower high, and again, what happens next is that price dumps quite violently. Also, what you can see before, again, the absorption at the bottom of the range. So here we have higher lows, whereas what happens here is that we have lower lows in CVD, and once again CVD is this cumulative volume delta, which is showing you the delta of the buying volume and selling volume over time on a cumulative basis of the market participants who are using the market orders. So even though they were selling here more, someone was absorbing the pressure, but then as the price goes up, and the big players potentially distribute what they accumulated on lower prices, there is exhaustion and there is manipulation. There is not enough market participants buying, so the price dumps. And after this dump, as you can see, price stayed in this downtrend. Once again, here we have an example of exhaustion, as price is making almost equal highs, whereas CVD is making significantly lower high, which again would say that there is not enough market participants, not enough market buying volume to push the price higher, so it's more probable that the price will dump. Interestingly, also here you could see some absorption, as CVD was making a lower low, while here you can see a higher low in market price. So maybe it was like one last distribution of the big players. They were able to absorb the selling, they were able to push the price higher, but then because of this lack of market participants, the price broke down again. I think that in case of CVD, we should look at both the exhaustions and also the absorption, because even though the CVD is decreasing in this range significantly, it doesn't need to mean that there is this heavy selling which is absorbed. From my perspective, as I showed you, CVD decreases in this range because one, someone was absorbing and supporting the price at the lower bound of the range, but also at the highs of the range. Each time we created new highs, there were less market buying participants. The buying volume of the market orders was the delta was lower, so there was not enough market participants to push the price higher, which from my perspective could be also perceived as some kind of manipulation done by some large players. All right, so that's it. I wanted to make a quick video about CVD. I hope that you liked it. Please let me know your comments, and if you enjoyed the show, please like and subscribe. See you in the near future. Bye.